And we are back. So last week we discussed about like why
Stable
stable coins.
coins.
Yeah, exactly. Like why stable coins matter, or before that, like what is a stable coin, right? And it had been a fascinating discussion. Obviously, this is the first time you are learning about coins. This is
Absolutely.
the first time I am discussing and explaining so extensively on why stablecoin matters so much because I'm so excited about this topic, and we need to spread the knowledge, the awareness that a product like stablecoin exists, and you can
Right.
actually take advantage of it wherever you are in the world. This is not just something that is a fancy financial product only restricted in Wall Street, so to speak. So in this episode, the primary issue that I want to cover is the passing of the Genius Act. It hasn't obviously gone the whole way. It has passed the U.S. Senate, but I want to discuss like why actually it matters. So let's just start at the very beginning of what the Genius Act actually is
Hmm.
and what it does. So basically, the Genius Act is the first step towards a serious crypto regulation. And by crypto, obviously this is primarily focused on stablecoin. And since stablecoins are broadly a part of crypto, so this is basically also the first comprehensive US federal framework for crypto regulations and as well as stablecoin regulations. So why? The first question should be like, why do we need government approval on something? Uh,
Right.
yeah, so that's the most basic and fundamental
I have
question.
an assumption that it might be because people don't trust crypto that much. People don't know about it much, so they
Yeah,
get
yeah.
that government stamp of approval.
Yeah, exactly. That's one part of the question, right? So that if the government that brings you the more conservative side of the market that basically doesn't want to do anything that doesn't have a stamp of approval from the government or from the right financial authorities, right? So that's one part of the one side of the coin. The other side of the coin is also actually kind of similar, is because even if you are interested in crypto, even if you are interested in using stable coins, you see the point of it. You are afraid to invest billions of dollars as a major
Right.
company. Because like what if the government cracks down on it tomorrow? Like this is actually something that legitimately happened in the last few years. So there was this thing called Operation Chokepoint. This is the name of a regulatory crackdown that happened under the Biden administration in the US. So
Uh,
what they would do is they would target companies that deal in crypto, the companies that are even banks that are facilitating crypto companies and letting crypto projects keep the store their money in this kind of banks. Like there was the Silicon Valley Bank, Silvergate Bank, and all of these banks essentially got shut down because the government had an agenda to stop or hinder any kind of crypto related innovation. And even to the extent, like if you are the founder of a crypto company and you wanted to buy a house, the bank wouldn't approve you for a mortgage because you worked in a questionable industry. And
mm,
so that was basically the why crypto people named this a deliberate attempt to kill crypto. We called it like the Operation Chokepoint. So even in a regulatory environment like that, where this kind of attacks are going on against people, against the crypto industry, as a company, you are not very confident to launch
right.
or to invest billions of dollars in this industry.
And
So
and passing the Genius Act allows them to be much more confident that okay, the government is
yeah.
not coming for me.
Yeah, exactly. The government is not coming. Trump has been very pro crypto. Actually, there's this interesting data that came out that in the last 1 year, Trump's family has made like $55 million of profit from crypto.
I
So,
think I was seeing that his son Barron Trump,
yeah.
even he did something. He made a lot of money on
Yeah,
crypto.
so his son Barron Trump, Eric Trump, Donald Trump Jr., all of these people are deeply involved in crypto. They have this company called World Liberty Finance, and they launched their own stable coins. So, like obviously they are in the business, they are making money, and I have no issues with it because like them coming in also assures some sort of regulatory approval. And that's exactly what happened. Like the Senate passed the Genius Act. Genius, Now we are waiting for the House to pass it, and once that is done, it becomes the law. And stablecoin from $250 billion some market size, we are looking at anywhere from like 2.5 trillion, even higher than that, in the next 5 years. So yeah, extremely exciting development that are happening. Let me just actually give you a couple of breakdowns on why, like, what are the specific points that the Genius Act is covering, and what are the requirements and restrictions that Genius is putting on the stablecoin issuers. The so I have I've written this article breaking down the Genius Act, and the six key provisions that I covered in that article is: number one is one-to-one reserve. Like in the last episode we covered, like for every dollar of stablecoin that you issue, you need to have like that same dollar
$1.
in reserve. So basically, you need to have like one-to-one reserve. If you're like USDT, if you're USDC, you need to have it. Now that reserve comprises of, obviously you can have physical cash in it, and then you have to have treasury bills maturing in 93 days or less, and you can also have like Fed RRP, like reverse repurchase agreements, to basically a size a chunk of it. So that's basically what your your reserve asset class looks like. You cannot have any stocks, any equities, any precious metals like gold or anything like that. You need to have either cash, or treasury, or repo agreements. That's pretty much it. So the goal has always been to keep the risk on this reserve assets as low as possible, and basically as liquid as possible. So whenever you need to sell it en masse, you can directly sell it, and there will always be enough liquidity that someone else is willing to buy it at that rate. So yeah, that's the first part, the one-on-one reserves. The second one is a retail yield ban. uh, and what I mean by an yield ban is basically you cannot make money, like you cannot earn any yield or any interest just by holding the stable coin as a retail user. Because we want to, they're trying to make a stable coin pretty much the same thing as the money. And when you hold cash, you don't get any returns on it, like you don't get any interest on it. When you deposit it in banks, you do get it, but that doesn't inherit that inherently doesn't come from the cash itself, but the bank is giving an interest for depositing that money to them, right? So a lot of people in crypto do not like this. They want the stable coins to be yield bearing, but I actually personally I don't have any issues with it, because there are other instruments where you can make like similar amount of yields. There is this thing called like a tokenized money market fund that we can get into in a later episode. That it's basically works very similar to a stable coin, but it's not a currency. It's just basically it's an asset. So if you want yields, you just hold tokenized money market funds. So nobody's going to say anything to you, right? So yeah, so as a retail holder of stablecoins, you cannot earn any yields. That's point number two. Number three is think of this like this. What happens if the stablecoin company goes bankrupt for whatever reason? Like there was a massive run. Everyone started selling their the USDC, USDT, or anything else because of something or the other. Like there was some issues with the company. The company turned out to be fraud, etc., 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 or simply they've lost all of their competitive advantages. So what happens is the company declares bankruptcy. So who gets the money first? The US government assures that the holders of the stable coins gets the money first. So let's say you hold 1,000 USDC. Uh, this
The US
law,
government ensures now, or it will after the Genius Act's passed?
it's not insured because it's one to one backed. So you don't need an insurance. The company's reserve is insured by itself. It insures your holdings, right? So basically, you have $100 or $1,000 USDC. The company goes bankrupt. The government will make the company pay you first, pay the holders first, and only then they get to pay out to basically other debtors, other investors, or whoever the company owes money to. So basically, it's an FDIC style receivership. Where while this is not an insurance, like if a bank goes bankrupt, you get an insurance of up to whatever amount that your country allows insurance amount up to. And next, in number four, we have a foreign issuer firewall. That means if you are a foreign issuer, you have to abide by the points that the Genius Act outlines. If you do not, then you cannot issue a stable coin within US jurisdictions. So a few things. First of all, you need to have a reserve that consists of these US treasuries and US repo agreements, and basically everything on the reserve side of things. And also they want to inspect your reserve assets at any time of the day they want to. So basically you have to be completely transparent to the government surveys and inspections, and you have to abide by it completely.
So is there is also a chance that once the Genius Acts gets passed, other countries will also see and can maybe try to come up with their own acts, right?
Yes, yes, exactly. and
So,
uh, uh, and that brings mass adoption, right?
right.
Yeah. And if you, let's say, if you decide not to abide by any of these rules, then you have to make sure that you are IP blocking US investors. Like US investors cannot access your website, cannot open accounts with you, because if they do, then the US government is going to come after you.
Mm.
So, for example, USDC, they are pretty much as compliant as possible with the Genius Act. Like now they will be fully compliant, but even before the Genius Act, they were very, very compliant. Whereas USDT is not. USDT in their reserve assets have gold, they have Bitcoin, they have treasuries from other countries. Now that isn't going to fly under the Genius Act. So what USDT is considering doing right now is issuing an US only version of USDT. So like there will be a second USDT that only issue the users from the United States gets to hold, and that US only version will be abiding by all of the requirements of the Genius Act.
So that will get the government's insurance that if something messes up, the government will pay. Like they sure have that.
No, 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 the government isn't paying actually. The government is liquidating your reserve asset to pay the holders of USDT. So like like as I'm saying, like if you issue $100 worth of stable coins, the reserve assets have to be $100 that you have in your reserve. So what that means is if your company goes bankrupt, the reserve asset is still there and it is still worth $100. So what the government does is they sells the reserve asset and pays back to the holders of USDT. So it's not
Got you.
insured by the government. You are insured. The company insures itself essentially. So that's
Got you.
pretty much it. Like there are like I think 56 billion dollars worth, no, $60 billion worth of USDC is currently circulating in the market, and for that they have like 60.9 or $61 billion worth of reserve assets. That reserve assets, they have value regardless of whether there is a stable coin or not. So you just basically, as the government or as an intermediary in the bankruptcy process, you just walk in there, you sell, you take control of the reserve asset that they have, you sell it, you pay to the holders first, and then you pay out to any other debtors that the company have. All right. Yeah,
Got you.
so then we discussed the foreign issuer firewall thing. A couple more points is one is the freeze and seize mandate, whereas you essentially come under the jurisdiction of the United States. So if the United States say that a criminal is using your stable coins and you need to freeze that account, they come with proper accounts, you have to abide, which USDC already does. And so you basically any business entity that is doing business has to abide by US laws. So that this is a no-brainer. And the other one is it's actually basically a dual regulatory model where two different branches of the judiciary, law enforcement handles different things. One is the Fed, and another one is the OCC, which is pretty relevant to this discussion. We don't want to go that deep into like uh, there's a boring lawyer stuff. So that's basically the 6 points that uh, the Genius Act is all about. These six primary points. So yeah, that's actually what I wanted to cover in this episode, specifically why the passing of the Genius Act is so important. Now that is covered, let's move on to actually another interesting segment that I want to do today is why do we care about stablecoins? Specifically, like what can you do with stablecoins? We understand that the technology is great. Anyone can use it at any corner of the world. But what are the actual use cases of the stablecoin that we are seeing today in our world, right? So there are a few things I want to cover. Actually, tell me, what do you think in terms of like you have uh, gathered some decent amount of knowledge about stablecoins in the last couple of episodes that we have done. What do you think like are the most obvious use cases that stablecoins have?
I think it's first of all the speed of transactions. I think it's much faster. They have. I'm not sure if they how less of transaction fees they have,
Mm-hmm.
but
Okay.
like
Yeah, go
as
on. I'll
as you
get.
discussed previously, that it's much faster for, let's say, someone living in Turkey to send money to some other country using stable coins, if other than choosing maybe let's say PayPal or something. It's not only more expensive, but it also takes more time. I think that's
Yeah.
the one that stuck out to be the most because they work remote.
Yeah, exactly. So the transaction fees depends on the blockchain that you are using. So it gets complicated a little bit here, but let me just simplify it. So like if you are using the Ethereum blockchain, you can expect pretty high transaction fees because transaction fees depend on how many people are using the blockchain at any point of time, and is the blockchain capable of meeting that demand. If not, then transaction fees goes up. And Ethereum has famously been very difficult to scale over the few years, and that's because of this thing called this blockchain. Is it called the blockchain trilemma? I think it's called that. So like there are three different issues. I'm going slightly off a tangent here. So basically what this is the trilemma deals with three issues, obviously: the security, decentralization, and speed after execution. And a blockchain can only provide two of them at a time. So like you can be extremely decentralized and extremely fast, then you are not secure. You can be very secure and very decentralized, then you are not um, you don't have speed. Like the speed of execution is very low, and Ethereum is extremely decentralized and extremely secure, so they compromise on the speed of execution side of things. So to remedy that problem, we have a bunch of different other blockchains. Like there is Tron, there is Solana, that are very fast. And then there is this thing called layer 2 blockchains. Layer 2 blockchains are based on they live inside a host blockchain. So like Ethereum will be a layer 1 blockchain, and on that layer 1 inside that layer 1 blockchain is a layer 2 blockchain that actually can fix a lot of the issues that its host blockchain is dealing with. So for example, Base is a layer 2 blockchain, and if you use Base, the transaction fees are very low, the speed of transaction is very high. So as long as you are using like a Tron, a Solana, or a
What's the
Base.
I have one question, that how is being the being a layer 2 blockchain help? Because if the host can't do it itself, why does the what makes the lower layer 2 blockchain allows the layer 2 blockchain to be
Yeah, sure,
fast?
sure, sure, sure. So basically, without going into too much technical details, what they do is they efficiently um, when you did homework when you were a kid, let's say when you were doing math homework, your teacher would always say, show me the work that you have done on the rough calculations. Like the you don't put that in the actual math problem that you are solving. You are problem like solving the smaller formulas and stuff like that on the side, just to get the answer and put it here, right? So when a layer 1 blockchain actually does all of that stuff, all of that calculation on the main place. So what happens is it's just unnecessary amount of data getting processed. So what a layer 2 blockchain will do is they will only basically deal with the data that is necessary, and whatever data that is not necessary, they will put it in a different section. So this concept is called a roll up. uh, and a roll up, basically what they do is they will show you the main problem that they have solved it, and as long as you don't challenge the conclusion that they have come to, you basically accept it on the face value and you go on. But if you think that the calculation is not right, then you ask them to show their work, and then they basically bring the whole data. So they essentially minimalize on the amount of data that you are dealing with here. And when information is low, the load on the yeah, the congestion on the blockchain is also gets lowered, right? So that's basically how you deal with these problems.
Got
Yeah,
you.
okay. Yeah. So now, as you said, the speed of transaction is very fast, which is like true. Because actually, what I was doing, I was recently checking, looking into like to prepare for this podcast. I was looking into like how many steps does a normal bank have to take to send money from one country to a different country in a different currency. And I was asking ChatGPT, and ChatGPT came up with an answer which is basically like more than a dozen. Like there were 13 steps to be exact for two banks that they need to do, basically accomplish like step by step, like check off from the list, and only then after like 2 to 5 days the money goes to your account and it settles, and now you can finally withdraw it. That simply doesn't happen in a blockchain. What happens in a blockchain is you issue the transaction, depending on what kind of blockchain it is. Most of the blockchains today are proof of stake. We'll not go into details what a proof of stake blockchain is, but essentially there are a bunch of validators who will look into the transaction. First thing they will see is, do you have enough amount of money to send this amount, this payment to the other guy, right? They will see it and then they will approve it, and that's done.
I see.
Yeah, so it's less than two steps, so that's why the speed of execution is so fast on blockchain. uh, okay.
And
So
I'm trying to connect it with the Genius Act. After the Genius Act's passed, does it stay the same, this number of steps, or will government say, okay, we need more documents from you, or something along those lines?
yeah, okay, so here's what happens. Let's look into it. In the last episode we covered the different types of stable coins, right? One is like privately issued stable coins that are completely centralized, like USDC or USDT. And in that case, what they will do is, for large account holders, they will ask you to do KYC upfront. Now for me or you, we don't need to do KYC with these companies. But let's say you are a business who is dealing in millions or billions of dollars of stable coins every quarter, every month. You will need to have an account with Circle. They verify all of that stuff for you and you do it. But if you're a retail user, no, the steps don't change. It's still a blockchain. It still follows all of the exact rules of a blockchain. The only thing that changes is if the US government tells you as a Circle that this account here, this wallet here is suspicious, so you need to go and freeze all of the USDC that this account holds, and they can do that.
After the Genius Act's passed, right?
I mean,
Or
the
still it
USDC
is
is
the
still
same?
the USDC. It's a choice. Okay, the Circle doesn't want to aggravate or doesn't want to make the US government angry, so they still do it, and obviously they do it particularly for nefarious actors. For example, like black hat hackers who are exploiting different kinds of crypto protocols and stealing money. For, let's say, terrorism financiers who send money doing arms dealings, doing narco dealings and stuff like that. So they do it for that, but not in general. Like we haven't yet seen uh, like large scale interference in stablecoin dealings, right?
Got you.
Yeah. And now, if you are using USDC, USDT, there is a private company that is issuing is private company is controlling it. But if you use a decentralized stablecoin like DAI, that is over collateralized with the crypto assets, then nobody is overseeing anything here. You can do whatever you want to do. That's pretty much what we're doing here. Yeah, right. So there are, like, we actually briefly glossed over a few of these points in the last episode, but let's actually just go one by one on these
Hmm.
specific use cases. Number one is remittance. So remittance is when, like, NRI Indians, like non-resident Indians, when they live in the USA or UK, they send money to home, right, to their home. They send it to dollars or pounds or whatever
Hmm.
whatever currency they are in. They'll send it back home, and this is actually a huge amount of uh, transactions that happened on a regular basis across, like, from the first world to the third world, which is essentially people who work in the first world sending money back home to the third world.
Right.
And the amount, I think I actually currently blanking on the number of total remittances that India receives every year, but it's a significant chunk of money. Um, so, like, domestic banks makes a ton of money. from these remittances. But again, like you are sending, like let's say you live in a country like Uganda. You don't have proper banking infrastructure. The banking infrastructure isn't
I
very.
actually looked it up. The amount of
uh
remittances, it's actually over $100 billion
Yeah,
for
yeah,
for 3 consecutive years. That's crazy.
yeah, exactly. And this number is only going to go up. Uh, and India does have a pretty good financial structure. Like it's almost, even I think in some cases it's better than the first world because of the UPI system that we have. Other countries simply does not have a system like UPI. But in general, with Swift, RTGS, NEFT, these infrastructures are pretty much on par with any other global advanced fast world countries that we have. But obviously, I don't think we have the infrastructure to deal in billions of dollars going in concurrently. The kind of money that the Wall Street handles, like literally in trillions of dollars. So, anyways, like let's say if you are in an underdeveloped country like Uganda or Kenya, you simply do not have the banking infrastructure, or in a war-torn country like Yemen, and you want to send money to your family, you cannot. No, the banks don't work. How can you do that? Even if the banks don't work, you cannot fully trust the banks that they are going to actually do what they tell you to do.
Now
And
that you're talking about it, I see the advantage of stablecoin. So even without banks being there or a stable banking structure, stablecoin can fill the gap there.
yeah, yeah, exactly.
That's
And
huge.
one of the most interesting things that you will see is sometimes countries under economic pressure will limit the amount of money you can withdraw at an ATM. That what that means is you don't have access to your own money because the bank
But
says so. you
like
know
something similar happened during COVID as well. We were not allowed to take out all our
yeah,
cash.
yeah, exactly. And imagine you have an unstable government. Imagine inflation is extremely high. Imagine there is a war going on, or there's a war coming, and you want to basically take out as much cash as possible, and you simply do not have access to any of that infrastructure at
I
that
see the
point.
point of
Yeah.
decentralization.
Yeah, exactly. Because government just simply cannot come in and say, "I tell you to do what you do." So this is the point of decentralization here, where you take control over your own financial future and your financial destiny, and stablecoins allow you to do that. And yeah, like, can the US government still control a large portion of what these companies are doing? Yeah, sure. But like historically speaking, US has a very good reputation of letting the free market behave freely, whereas
Mm-hmm.
other countries interfere a lot. So you live in a place like India, you live in a place like Bangladesh or Pakistan, and you simply do not have as strong an economy as the US. Like, uh, so what do you do there? You save in US dollars directly. You don't give the US dollars to your bank. Like your family members are sending USD to you, but the bank is taking the USD and converting into the local currency and
Right.
paying that to you, right? So yeah, why would you want to go through with that? You want to save in US dollars, so you receive stable coins.
So bank as a am I tell me if I'm thinking this right. So bank as a middleman just becomes irrelevant, is it? When it comes to
Yeah,
like sending money from one country to another.
yeah. Especially, even till today, you cannot spend the USD in your country. Like, you cannot go to a shop and offer them to pay in USD, right? Someone has to convert it. But when stable coins become that widely accepted, I think a lot in a lot of countries, the native currency simply gets obsolete. No one, people stop using it, and they basically, like, you go for a coffee, like for example in Starbucks, a cup of cappuccino will be like, let's say, 400 rupees, and instead of paying 400 rupees, you pay them $5. They're $5. So basically INR becomes obsolete.
So it becomes like a global currency.
Yeah, exactly. And that's why the US people are so excited, because this is this is their chance to be extremely relevant even on a retail level. Right now, governments have like USD storages. Yeah, but retail investors or average person people doesn't have the access to basically save in USD. And with stable coins, you can. Like, why does the
Makes
government
sense.
gets to have all the fun? like like for example, the Indian government has bought so much oil in the last 5 years, but have you seen the price of oil coming down? Like the price of petrol just keeps climbing high, right? But the oil reserve in India is right now is like higher than it has ever been before. I just so very similarly, India has a significant amount of USD in storage. Like any third world country or any country in general has a significant amount of USD in storage, a significant amount of US Treasury bills in storage, because they are banking on the fact that the US currency is the reserve currency of the world. Yeah. So actually, you know what? Let me show you some data. Let's do some visual stuff and show you some
Mm-hmm.
data that I found in a research paper I was reading earlier. So there are a bunch of big companies
Mm-hmm.
that are working with stablecoins. So this report is actually done by Artemis, Castle Island Ventures, and Dragonfly. These are all crypto organizations.
VCs.
So yeah, these two are VCs, and Artemis is a platform that does
Okay.
intelligence stuff. Yeah, so basically, as you can see, the total issued stablecoins right now is stands at about $246.5 billion. I actually don't know if this number is real, because I think the number should be a little bit higher, like 250. But anyways,
Mm.
it's in the ballpark.
It's just
A couple of things.
$4 billion. Of
Yeah,
doesn't
it's
matter,
just
right?
yeah. Yeah, so a couple of things I want to show you. So these are the stablecoin payments by type over the last 2 years from February 2023. And this
Mm-hmm.
green one is P2P. P2P is peer to peer. That means if I pay you in stablecoins, that counts as a P2P transaction.
Okay.
See here, like the P2P transaction has been pretty much the same over the last 2 years. But one thing that has increased significantly
B2B.
is the B2B transaction. Exactly. So that means a lot more companies are dealing with stable coins, and they are paying
Mm.
their vendors in stable coin. They are doing their business deals in stable coins. Like in just the February of 2025, the $3 billion worth of B2B transactions was recorded, which is basically the highest we have seen so far.
Also, the increase has been in like the last 2 years.
Yeah, exactly. The increase has been, like, even to be
Yeah.
more exact, in the last 1 year. That is
Mm.
because like we have been approaching regulatory clarity. We have been building a lot of infrastructure in crypto that allows you to deal in stablecoin more smoothly. Like for a non-crypto user, how would you? Like, crypto can be actually very confusing. It is one of the biggest issues that I have in crypto, is that explaining crypto is very difficult to a layman who doesn't understand crypto. So we are figuring out our user interface, our user experience side of things. So
Mm-hmm.
yeah, hopefully this number will keep increasing. So this is the one chart, and another chart I want to show you. This is actually just a chart of how many people use USDT and USDC, and it's overwhelmingly 75% or more people use USDT.
DT.
Yeah, USDC with the Genius Act incoming, like a lot more US, like pretty much all of the US companies will start using USDC. So this number will actually
Why is
uh,
that?
will increase, because it's a US company, right? USDT is not a US company.
Ah,
Yeah, it's completely US regulated.
okay,
Uh,
that makes sense.
Basically, all of the big names in the financial world are like in the stablecoin financial world, or basically people who are in the fintech side of the world, are very familiar with Circle and what they're doing. So yeah, it's familiarity, general marketing. Whereas like in the Middle East, in South Asia, in South America, people are more familiar with USDT, so they will stick to it for as long. You basically get the point, right?
Mm-hmm.
Yeah, this is another one. Like how many countries are actually participating in stablecoin flows? So United States and Singapore are on par at 18.7% and 18.4%. India is at number 7 or 8, yeah, at nearly 2%.
Eight.
Yeah,
Mm-hmm.
number 8 at about 1.9%, 2%, and this number will go up significantly as well. And actually, more and more countries from the developing world will start using stable coins once they are familiar enough with the product. So yeah, this is something I found very interesting. I wanted to show you. Okay, so yeah, that makes my point. Let's see what else can we cover. Yeah, now let's dive into the world of AI agents. This is something that I have been recently very excitingly researching, just to understand like the ramifications of it. Like, what do you know about AI agents in general?
So I've been using this agentic agent in WinSurf, and
Hmm.
it almost, if you're trying to build something, now I do something which people call vibe code, and it's not respected
Yeah.
in the coding world, but I can see how connecting AI agents and stablecoins will help, because it just takes so much of the learning curve out of, even for a layman like me. I don't understand many things, but if I can speak to the AI agent in simple language that, okay, I need this, it can just do it for me. It just makes it so much easier, and even it lowers the bar, because from a distance it might look like so overwhelming.
Yeah, yeah. Let me blow your mind here because what you are talking about is on the education level side of things, right? But even
Mm-hmm.
more interestingly, what the AI agent can do is they can make the purchase for you.
Uh,
So, for example, you go to ChatGPT and say, "Hey, order a pair of shoes for me," you know,
mm-hmm.
and ChatGPT will simply go and do it. Like you say, like, "Hey, book this hotel for me," and ChatGPT will go and do it because you can have your personal financial AI agent that has access to a wallet that has real money.
Now imagine an emotional spender. He just keeps going on GP and just keeps asking, I feel really bad, I need this and this.
Yeah, yeah. I mean,
We might need another regulation for that.
yeah, yeah, yeah. Like, look, the emotional spenders are always going to spend. Even if we go back to the age of bartering, they will basically
Mm,
barter something for because they have to buy, right? And that's the promise of capitalism. It's the monkey brain that activates whenever we
right.
see shiny things. But yeah, like aside from putting aside the
Has there been any product like development recently that actually does it, or is
oh yeah,
just more of a concept?
no. We have crypto AI agent crypto traders who
Hmm.
will not only trade cryptocurrency but will actually create a cryptocurrency out of nothing.
Okay.
So they can do it because like to create an AI wallet, you don't need a sorry to create a crypto wallet, you don't need any permission. You just basically want to open create a decentralized wallet. You go to a wallet like MetaMask, you
Hmm.
create the wallet. They will give you a 12-digit seed code, 12 word seed code. You securely store it somewhere, and there you have it, a wallet. Whereas, like, how many documents does it take for you to open a bank
Yeah.
account?
Right.
Enormous. They will want your address. They will want your entire financial history. They will want your, uh, like pretty much everything that you have in terms of documents wise.
Mm,
But it's extremely easy for a AI agent to open up its own wallet account, a wallet, crypto wallet. You give him some amount of dollars. Let's say you give it $1,000, and you set, let's say we come up with a limit, like you cannot spend more than $100 at a time, and
mhm.
you need the final approval from me. So what it will do is it will say, like, hey, book this hotel for me from this date to this date. It will do all of that stuff, and it will ask you to just basically you will need to tap once to verify the transaction, and it goes through.
Ah,
All right.
it's almost like UPI, but you can activate it using voice. I'm assuming that if there are AI agents, we can use voice.
Yeah, but for you to use UPI in India, you need to have an active bank account.
But yeah, and that's, that's the next, like, the penultimate thing. That's the closest thing I can imagine.
Yes, yeah,
I can't even
exactly. That
wrap my
is.
head around that, how fast when AI agents and stablecoins connect. What happens then?
Yeah, exactly. I mean, you are talking about the interface that is like UPI, where you basically scan the QR code, you send the money,
Hmm.
and then you are done. But with AI agent, the AI agent doesn't need any permission. Now,
Right.
can an AI agent use a bank account? It cannot because it's a robot, and it won't even
Hmm.
have access to a bank account's website, let alone actually create one. Right, because there are like thousands of anti-money laundering laws and KYC laws that banks will simply not let you open an account, and if they don't, then it's completely like you have to do everything manually. Now imagine, like, what if a company can manage all of its vendor related transactions, all of the services like subscription services that it
Hmm.
uses. it automatically renews. Like you don't have to do anything. It renews all of your subscriptions. It pays out everything on time. Obviously you will need to build your own guardrails into it. You want to
Mhm.
make sure that it doesn't go crazy. You don't want to give it too much money. You want to train it, like what kind of transactions we do, what kind of transactions we don't do, and at the end, and basically have a final approval button that you just approve it with one click and it goes.
It's crazy to think that how once this happens that you don't need a bank account, you just need a wallet and internet access.
Yeah, exactly.
That's two
Like,
things.
yeah. I mean, banks have always been playing the role of middleman here. They make all the money. You pretty much take all the risks, because even if it is the bank is insured, the insurance amount is fixed. You are not getting your entire money out if the bank collapses. And the banks
Right.
banks make bad choices all the time. Like banks will lend people thousands of millions of dollars, like billions and billions of dollars, and the default, the bank loses the money, the government bails them out. That's exactly what happened in the 2008 financial crisis. Like the banks got too greedy. They
Mhm.
started giving out loans to pretty much everyone. There was this concept of a ninja loan. A ninja loan was no income, no job, no assets. So even if you have none of these, you still qualify for a loan. Like people took out loans in the name of their dogs in the US. Yeah, because loans were so cheap, interest rates were so extremely cheap. And yeah, these were called actually subprime mortgages. Subprime essentially means it's less than prime, it's shit. And they still give out this loan. So yeah, banks made bad decisions all the time, and banks never suffer the consequences of it. The consequences is always delegated to the economy, to the average taxpayers. So yeah, we don't need banks. After a certain point of time, we don't need banks.
There, like naturally, as an average consumer, I feel like there needs to be some form of regulation, right? Because maybe because I'm not so into crypto, I can't imagine a world where there is no bank, no regulation,
I
and
mean,
everything just
obviously. I
happens.
mean, we started the episode with discussing a regulation, right? So yeah, there will obviously be regulations. I don't see an anarchic world where everything, like you can do transactions and hold billions of dollars rampantly. That's not going to happen. Like government will always interfere. But the thing is, governments are not banks, or banks are not governments. So if we can replace banks with a few more efficient systems, why shouldn't we? That's
Like,
the point. That's the point essentially. And the banks are not going to go down without a fight. They are going to either, they initially they will try to block all of these regulations. They will fight tooth and nail to keep their relevancy intact, and if they cannot, they will try to adapt to with the new system. Whoever manages to do that, they survive, the rest die.
I think to your point that banks won't go down without a fight, I think that has made me interested in the history of banks. Maybe that is something we can discuss in future episodes, so we can
Yeah, sure.
understand that because history repeats itself at the end of the how will stablecoins come up? If banks go down, how would they go down? Maybe we can notice some patterns
Yeah, absolutely, let's do that.
or how the
All right,
economy
man.
was with before banks,
Come again.
like how society used to be without banks.
Oh yeah, like you know what we can do something like the history of stock markets as well, because these are the kind of line of thinking that gets us to really interesting points where we see the beginning, and the conception of how banks started to work, and how lending and borrowing started to work, and then how investment came up as well. Like we can even start a whole series on it. Yeah.
Right.
Okay, I think we have discussed enough for one episode.
This was pretty good.
Okay, yeah, amazing. Can't wait to have another episode next week. But until then, ciao.
Ciao.